Hello traders, this is Rich from Tradesight. This is our market preview for the coming session. This is going to be for Wednesday, October 2nd, 2013. We had definitely an update across the board today. We closed the gap from Monday, Friday that was left open from the news over the weekend, and actually tacked on a few from there. So we closed pretty strongly here. We were up almost 1% in the ES and better than 1% in the broad market. The Dow was the only one that really didn't participate as well, but that was relatively strong in the previous session. So maybe it's just a little bit of a catch up. That's fine. So I'm definitely going to give the price action today a B rating. Internally, the market was pretty decent. We had 1,300 advancers on New York and 1,100 on Nasdaq, and the trend closed at 0.71 without any real spike in the put-call ratio. So we're going to give the market internally also a B rating. So it was good across the board. Didn't really take in any important levels, but we definitely can cross the gap fill off the to-do list. Here's a look at the ES futures. We definitely pivoted back to the upside and made good on this camouflage buy signal from the previous candle. We closed the previous day's gap and actually got up and got into close the gap from 2 days ago. So there's a lot of work done here by the ES on the long side, but it was a fairly decent expansion to the upside. Note that we do not yet have a close and a follow through below the 50 DMA, so we're still short intermediate term positive. The trend remains short term negative without following through back above and changing the trend above the 10 EMA. Levels to watch to the upside are going to be 1702, which is going to be the area where we really pivoted and broke down from. It's also the general area of this high back in August. So that's going to be the near term upside level. The downside level is going to be the day's low, which is the 50 DMA, 1676, and then the previous day's low from Monday at 1667 is your next key support area. Below that, we can start looking at the Murray Math levels, but hopefully tomorrow the bulls won't need those. On the Nasdaq side of the market, the Nasdaq side was relatively more strong. What we did here was we broke out above the previous high and closed at a new high. We would have upgraded the price action to an A if we had a breakout on both sides, but we only had a breakout on the one side, so we can only give it a B. But overhead is going to remain at 3281 and a quarter, which is the 6 ace level on the Murray Math box. Key support is going to be 5 ace at right around 3200, which is roughly the 10 EMA. Keep in mind here that the 10 EMA has been in play here to the upside for this whole move so far. We did have this one close below it, just barely below it on Monday, but we never followed through below it. So we're above all three major moving averages and have some pretty good price action so far. Moving over to the Dow. The Dow was kind of taking a breather today. The Dow was definitely the thing that really kind of caused us not to upgrade the price action to better than a B, just because it was just an inside day. Inside day, we did 8 bars down. If we're going to get 9 bars down, that's going to possibly reverse the market. You want to see it close below 6 and 7, and right now we have not. So this could be just kind of a null count here, unless we get some better action to the downside here to load some more energy into the market. But we had an inside day, and if we break out of Monday's range either way, to the upside or the downside, we need to pay attention to that and understand that it could have some teeth to it and some real bite, since we're just kind of pausing today. The bonds today, here's the TLT, closed right at the 10 EMA, a little bit of a retreat. I don't think it's really a trend changer just yet. We're still above the 10 EMA. The 50 is still downward sloping, which is always negative until it turns positive and gets that positive slope to it. But this is something the bulls can kind of recoup and hopefully work from. Bond market bulls want to see this gap close. It hasn't yet. So right now, all these people up here that bought in the last 4 or 5 days are just kind of hanging underwater. So I'll have to see some better price action out of that. But for now, very kind of tentatively, we're still short-term positive. There's nothing really new in the cumulative advanced decline line, so let's go right to the 10-day trend. 10-day trend today really didn't move the needle too much, and we're actually getting pretty close to oversold. We had this 0.71 reading as of the close today, so that's definitely not going to elevate the average. But we haven't really retreated, so there's actually some pretty good gas in the tank here if the bulls want to pivot and go back to the upside, because we're much closer to the oversold threshold of 1.35 than the overbought area at 0.85. Our S&P TLT cross took a little turn to the upside here. Haven't really been able to recoup this regression channel, so for now we've got a little bit of a positive design, but definitely not anything with any teeth to it just yet. So this longer term measurement is still relatively negative until we get back up to that trend channel and can see some more risk on activity from the players across all the different asset classes. Didn't really see it too much today, just a little bit. I think it's appropriate to take a look at the S&P versus the NDX. The NDX is the white line, broke out to a new high today. The S&P is still lagging, but that's okay. The last thing you want to see is the Nasdaq lagging and the broad market struggling, but that's not the case here. Right now we're seeing the Nasdaq side of the market exert itself and show some positive signs here. What we would expect here is we expect that the S&P will catch up as long as the Nasdaq side can maintain this relative strength. This is definitely a positive overall development for the market. All right, so here's a look at the SOX versus the NDX. This is the ratio chart. SOX is actually having some trouble here. We haven't really been able to gather any kind of a upside momentum here. We definitely would like to see the SOX start to curl up here and exert its influence on the overall NDX, but it's really not. This is the one thing that's really kind of troubling here. If you can see the overall pattern, there's the potential here for a head and shoulders pattern. We've got a left shoulder, we've got a head that broke out into key resistance, and we've got a right shoulder potentially forming that would break below this neckline right here. If we toggle up to the weekly time frame, I think we'll get a little better look here. Here's a look at the pattern. Definitely not what you want to see. We've got this lower break here in the neckline, so that's definitely a very small minutia positive for the bulls. You prefer to see the neckline not really broken as it's trying to form the right shoulder, but we'll have to see how this plays out. This is definitely not an encouraging sign, and we definitely would prefer to see the semiconductors exerting themselves and influencing themselves a little bit more positively in the overall picture. All right, so here's a look at the sectors ranked from best to worst. Top gun on the day by a good margin was the BTK. BTK outperformed all the other sectors and was definitely the top gun in the Nasdaq sectors. Airlines were also strong today, but take that for what it's worth. Bottom performer today was the XAU, was definitely a source of funds as it's been, and the BKX was near the bottom of the list with basically a flat performance. And that actually today that's fine. I have no problem with that. The reason being is that the BKX underperformed, gold underperformed, but look what outperformed. What outperformed was the transports. The transports were up 1.3%, outperforming both the Nasdaq and the broad market. The oil services plus 1.26% outperformed the broad market and also the Nasdaq. So those two very important late cycle sectors exerted themselves and showed some relative strength today, and that's very welcome to the market. The only thing I would have preferred to have seen was a little better performance out of XOI. At least like to see this at the mid-range here. Wasn't, but the transports and the oil services outperforming the market is a good sign, exactly what you want to see later in a cycle, and potentially setting the table for a good push through the fourth quarter of the year with a nice positive fourth quarter once everything's said and done. All right, folks, as always, thanks for listening. This has been Rich for Tradesight.